Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the cryptocurrencies. We are going to look at Bitcoin, and we're going to take a look at the big pullbacks they have all made. It was a dramatic pullback today, but all I can say is it was all in the charts. If you've been following our charts, then you were fully warned of the impending danger, and so yeah, this is why it pays to follow the charts, okay? Because the charts will lead to the pot of gold, but they will also lead away from danger. Okay, so let's do a little recap. We called the climax spike back here. It came back up, hit that double top, came back down, broke the middle Bollinger Band here on the 21st of December. This is Bitcoin Coinbase. And then it came down and it hit the 50-day simple moving average here on the 31st of December. We were saying that was the level it needed to hold. It did hold and it bounced. It got back above the middle Bollinger Band on the 5th, and then unfortunately it broke back down on the 8th and was failed to stay above that purple line in the middle there, which is also the 20-day simple moving average, and it pulled back. That was signaling downside risk. Now it came down and it tested that 50-day simple moving average just like it did in December. It did that here in January, but on the 11th it closed below the green line. That close below the 50-day simple moving average signaled more downside risk. We did put out charts and alerts to everybody, so if you were following our TA, then you were on the sidelines. Kept telling everyone, go to the sidelines. This is not where you want to be long. The only reason that you want to be in Bitcoin right now would be short. Otherwise, you're going to experience some serious pain and suffering. The EMA4 has been resistant. It's been riding that lower, and it did come down to 10,000. That's what we said. We said on this day, when it broke below the 50-day simple moving average in the 11th, that 10,000 was on deck if the 50-day simple moving average turns into resistance, and 10,000 was on deck because that was the 100-day simple moving average level. That's the gold line right here, and that's exactly what happened today. Notice the lower wick on today's candle came down and hit the 100-day simple moving average and bounced. And so yeah, if you look at the lower wick on the previous bounce candle from back here on the 22nd, when it came down and it tested the 50-day simple moving average and bounced, it's pulled a similar move today with the 100-day simple moving average. So now that is the key level to hold. The share price needs to stay above 10,707. That's the level of the gold line right there. If it can hold that level, this is where it could get a technical bounce. Now, if candles are still below EMA4, currently at 12,887, it signals the bears are still in control and downside risk. It doesn't matter if it's an equity, a commodity. It doesn't matter what you're charting. If it's a cryptocurrency, if candles are forming below EMA4 on the daily chart and you are long, it is a risk to hold. That is just that's a fact. And so just keep that in mind. It's going to need to close above EMA4, that's the pink line, and turn it into support to get a reversal going. Now notice today's candle did drop below that lower Bollinger Band. The lower Bollinger Band's up here at what is that at 9? No, up here at 12, just right around 12,000. So it's the bottom of this purple line here. So the candles could work back into the bands. We do have this is an oversold condition here where you're getting a bounce off of the low. If we flip it over to the 15-minute chart, you can see here there was a bounce off of the bottom, and so this is what has to happen. Notice the big volume spike down here on this 9:30 candle, and so it came down here. It hit a bottom at 3 o'clock here, it looks like, or yeah, I'm not reading that correctly, but at 2 o'clock it looks like it hit the bottom, and then yeah, it bottom close. The low close is the bottom of this candle, and then it had a nice bounce here on the 2:30 candle. So yeah, so the 215 and 230 candles were forming a bottom down here. Notice that there's big volume at the bottom of the chart. So there were bottom feeders down here loading in the 10,000s. And so they were able to get the share price now, or the cryptocurrency price, back above the middle Bollinger Band, which is currently, it's over here. It's 11,182. That's this purple line. It needs to hold that level. If that level can hold, it could get an uptrend going. Now look what's happening. It's hitting the green line. The green line is the 50 simple moving moving average currently at 11,671. It has to close above that green line and turn it into support to head higher. If it turns into resistance, similar to back here, notice how it hit the green line and pulled back, then you're going to see the same pattern. It's going to be a temporary top. Now, if it closes above and turns that into support and you start seeing candles forming on the 15-minute chart, keep in mind that on the 15-minute chart, candles set every 15 minutes. And so if you start seeing them setting above that 50 simple moving average and it turns into support, that's going to signal the bounce play is on. So keep an eye on the middle Bollinger Band and the 50 simple moving average on the 15-minute chart. They have to be turned into support in order for the bounce play to begin. Okay, if candles are forming below, it signals that more consolidation. Currently, the low down here at 10,166, you know, if you see it drop below that, that's going to signal more downside risk. Basically, it has to hold that 100-day simple moving average now that it's been tested. Okay, let's look at the Bitcoin Bitstamp chart. Exact same setup. You know, it came down, hit the 50-day simple moving average, you know, bounced back up, came back down, hit that 50-day simple moving average again, the green line, got above the middle Bollinger Band temporarily over here on the 5th, and then, you know, over here on it was finally on the 9th, the middle Bollinger Band finally broke. Notice how the candle started forming below that purple line. That was a red flag. And then finally on the 11th, that close below the green line was a big red flag. It was a bearish change in trend. When that happens, you have to follow the charts. That was a good place to take a short position if you were looking to short here, or just for future reference if you're you know, looking at for strategy. That close below the key support level was the signal to attack, and then as long as it was resistance, the signal was to keep attacking. But now it's hit the key support level. Now look, it's bouncing off of the bottom of this channel. Notice it hit that support line. That's why it's always important to draw in your trend lines. And so notice this descending support line was the low of day. It bounced right off of that, just like money, and then it bounced right off that 100-day simple moving average. If you watched our last video and you took our advice and said that there could be a technical bounce play off of that 100-day simple moving average at 10,600 support zone, you could have placed an order in there and had a nice little technical bounce. So keep that in mind on these key moving averages. If the 100 does break and it goes down to that 200, a bounce off of that for the first time would create a nice technical bounce play. So right now it has to get back above EMA 4. It's going to signal downside risk if it's forming candles below that level. Right now today's candle is forming below the lower Bollinger Band, so you could see a bounce tomorrow and the candles work back into the bands, and they could run back up to that EMA 4 at 12,855, and if they fail to close above, it will signal the downtrend is continuing, and then you would likely see that 100-day simple moving average at 10,613 tested again. Has to hold the 100-day simple moving average. Major red flag if it doesn't. This could play out similar to here. You know, you get the bounce, it runs back up. You know, this might run back up, hit that middle Bollinger Band 50-day simple moving average, and pull back down again. We just have to see how it plays out. The only way Bitcoin gets a new uptrend going is when that 50-day simple moving average and middle Bollinger Band way up here in the 14,000s turn into support. If they are resistance, it signals more downside risk. It signals the bears are in control and it's in a downtrend. Okay, let's look at Bitcoin Cash. So this is not what the move we were looking for, obviously, because you know, we're not shorting any of these cryptocurrencies ourselves. You know, we're not accredited investors. Only the big players are getting able to make money off of this. And we knew this was going to happen, right? The big short. We called this a long time ago. It just took a while for this to develop, and it's been the big short ever since they had the futures trading for CME. And so now check it out. We've got this breakdown. Okay, so what we look for when the very tight Bollinger Bands happen, this is the lower Bollinger Band, the upper Bollinger Band, and then the middle Bollinger Band. And when it gets really tight, it signals a move is coming. And so we were looking for a break through that upper Bollinger Band to signal the breakout to the upside, but instead we got the breakout to the downside. This is not the move we were looking for. So unfortunately, this signals more downside risk. What's going on now is you do have the candle breaking below the lower Bollinger Band, and when that happens, it signals it's an extreme move to the downside. So the candles could work their way back into the bands. Notice how there was a really tight channel for a couple weeks here, and then finally it broke to the downside. Well, as you can see here, it's hitting support from back here from the beginning of trading for Bitcoin Gold, and so it's going back to its previous levels. You can see here this is a key support level that it's hitting right now from back here, and then ultimately the ultimate drop would be if it came down to the low close. down here at 1227. You know, that's the downside risk. If this 1700 support zone fails to hold, you know, you have this 1600 right here, the close right here, and if that breaks, you're looking at a drop all the way down to 1200. So this is not the move that the Bitcoin Gold or Bitcoin Cash. I'm sorry, this is Bitcoin Cash traders where it has yeah. So sorry about that, but the Bitcoin Cash people were not looking for this move. Now, if it can get back above EMA4 at 21.99, that's the pink line. That's going to signal the bounces on. You could see a technical bounce. Now, whenever they get below the lower Bollinger Band like this, the candles could work back into the bands up to EMA4. And then EMA4 is the sell zone unless resistance breaks. So you can play that bounce off of low of day back to EMA4 and then unload at that level because the downtrend's likely to continue. If it closes above EMA4, then that's a signal the bounce plays on, and then you can ride for, you know, try to play that bounce, you know, for a further ride. If EMA4 fails to break, that signals more downside risk. Okay, this is the Bitcoin Gold chart I was talking about. Notice how it had the tight Bollinger Bands as well, and it actually had the breakout to the upside that we were looking for. We wanted to see a breakout to the upside that happened on the 13th, and it got above the green line here, which is the 50-day simple moving average, but unfortunately that level broke today, and so now it's back below the 50-day simple moving average. It's testing the middle Bollinger Band here and breaking middle Bollinger Band support. That's the green line right there, and so that's the key level to hold at 17,017. You know, if it fails to hold, then you can see it drop down here to the bottom of the channel at 13.6. So this is an important level for Bitcoin Gold to bounce. If it's going to keep this new uptrend going, this is where it should have a technical bounce. So look for a bounce off of this zone right here. You know, it needs to get above 17. If 17 turns into resistance, that's going to signal downside risk, and you could see 13 tested. If it can hold this 17 zone, it could get a bounce and then get this new uptrend going that it's trying to start. It has to get above the 50 simple moving average at 18.9. That's the green line to break out higher. If you see it close above that level, that would be very bullish. Okay, so if the middle Bollinger Band turns into resistance, it's going to signal more consolidation. Look at this huge bounce for Ethereum. Wow, look at that lower wick. Huge bounce. Look how history is repeating. If you look over here on the chart, you can see from back in December the 22nd, notice how this lower wick hit the green line, which is the 50-day simple moving average, and it had a huge bounce, forming a small candle at the end of the day, small real candle body and a really long wick. Well, you have a similar move happening today where it dropped briefly below the middle Bollinger Band. That's the solid purple line, currently at 1,035, and it dropped below and it hit this green line zone. I call this the 50-day simple moving average zone, when it gets close to that level but it fails to actually hit it. And so it got near that zone and it bounced. And so what's going to happen here is if it can stay above the middle Bollinger Band at 1034, the uptrend is still intact. Okay, this is just a normal correction during a strong uptrend. If the middle Bollinger Band is the bottom of the channel, if it holds, it's the reload level. If it breaks, that could signal the possible start of a new downtrend, and then you're looking at a potential pullback to the 50-day simple moving average. So fail to hold 1030 and 780 is on deck. Okay, so it's very important that 1030 support holds. A close below that level could signal the possible start of a new downtrend. Notice over here on the 30th, it closed below the middle Bollinger Band, but it got right back above and cruised higher. You know, you don't want to see the middle Bollinger Band turn into resistance if you're a bull, because it's going to follow Bitcoin and Bitcoin Cash and all these other cryptocurrencies and come down and test that 50-day simple moving average. You don't have to, you know, this is proven with these other charts that that's what's going to happen if that middle Bollinger Band turns into resistance. So you can trust me on that. You know, it has to hold. It's a key level. If you're a long Ethereum and you want to see the uptrend continue, that middle Bollinger Band has to hold. It needs to stay above 1030. Okay, let's look at Ripple. Ripple, okay, so it broke down. You know, we charted the breakdown. We put out alerts, okay, when it formed this doji here that it was topping out. It came over, it was riding EMA4. We put out alerts here when it broke EMA4 on the 8th. You know, it started this downtrend. And then we put out alerts about this middle Bollinger Band here, currently at $2.08, that if it broke, it would signal more downside risk. It did break, and it dropped all the way down to that 50-day simple moving average. And that's what it's holding right now at 117. Notice how it came right down to that green line and bounced off of that zone. You know, the 100-day simple moving average is below at 69, and that's near the low of day. You know, it came down to 87 as the low of day, and so that's the risk. If it fails to hold 117, then you're looking at 70 as the next target. And so this is in a bearish downtrend. I mean, this has been ever since that doji formed back here. It's been cruising lower, and this is why you don't want to be long if candles are riding EMA4 resistance lower. I mean, look at this. It's just pain and suffering. You're watching all of your profits disappear. It's better to be looking for that rebound. That's what's happening today. People were loading down here off the 80s. If it can stay above 117, it's still in play. It has to get above EMA4. If it doesn't get above 156, that's the pink line, it signals more downside risk. It's as simple as that. A close above EMA4 will signal the bounce play is heating up, and that level will have to turn into support. When you get the bounce play heating up, you have to use EMA4 as your stop loss level, and you don't want to hold overnight if it closes below, because it signals more downside risk. Notice the huge volume spike here. There was giant loading off the bottom here, so we have bounce players. There's a lot of people trying to play the bounce here, but just keep in mind, catching a falling knife can really hurt, so you got to know what you're doing. Be careful. Follow the charts closely. You need to follow the 15-minute chart. If you look here, Ripple is now above the middle Bollinger Band. That's the solid line here, the purple line. This is exactly what you want to see. Big loading at the bottom. This is sector-wide across all the cryptocurrencies. This is program trading. They drove it down. They loaded at the bottom. The people that are making these these cryptocurrencies move in this direction right now, they're orchestrating this. They loaded across the board on these dips at the bottom, and so now they've got it back above the middle Bollinger Band. That level has to hold. If it can hold at 114, that signals that this new uptrend is starting. Now it has to get above the 50-day simple or 50 simple moving average on the 15-minute chart at 127. If you see it above 127, that green line forming candles closing above on the 15-minute chart, that signals the bounce play is on. If you look back here, you can see it hit the 50s multiple times and failed to break, and it signaled more downside risk. So it's really not officially bounce play starting until candles are forming above that green line at 126, and if they can basically 127, and then those levels need to hold once it gets above for the bounce play to continue. So just keep that in mind. It's heating up, but it's not necessarily out of the woods yet. It has to get above that 50 simple moving average. Okay, let's look at Litecoin. All right, Litecoin had the tight Bollinger Bands, and it could have broke out to the upside, but instead it broke down to the downside. And as you can see here, we had drawn this ascending support line. And so notice this candle here on the 9th closed below ascending support. That was your red flag. Also, it's hard to see on this chart because of the freaking Bollinger Bands, but there was descending resistance, and as you can see, it has continued. So it's been this red descending resistance line has been big resistance. Failing to break that level was a red flag. Okay, so when it was trading sideways here, like I was talking about earlier with Bitcoin Cash, we were looking for a breakout through the top of this upper Bollinger Band. That failed to happen. It broke out to the downside. Okay, so it broke through the green line here. That's the 50-day simple moving average, currently at 222. It has to get above that level. That's the next key level to break. Notice today's candle is breaking below that lower Bollinger Band, so you could see the candles working the bands, hit EMA4 at 218 and continue the downtrend further. But look at the big volume spike. So there's huge loading off the bottom. It's across the board. They loaded all these cryptocurrencies, and so we follow the volume in and we follow the volume out. So right now the volume is signaling the bounce play is trying to start. See the big volume at the bottom here? It has to get above the green line. Notice it got above briefly over here on this 16th. So it got above briefly, and then now it's back at that level. If it can get above the 50 simple moving average at 196, that's the huge level. If you start seeing candles forming above 196 on the 15-minute chart, that signals Litecoin is bounce plays in play. If it fails to break that level and it drops below that middle Bollinger Band, currently at 185, the purple line, that signals more consolidation and downside risk. Okay, let's look at XMR. This is Manero. Had that beautiful uptrend. Had the really tight Bollinger Bands back here in November. Had the epic run. It was just easy money for everyone, and then it freaking topped out, right? And so now it's channeled out. It got the sideways channel going. And so when you get a sideways channel going, it's really important just to draw in the trend lines. That's the key here. Draw in, I don't know why it stopped like that, but yeah, if you draw in the trend lines, you can check out you can see where the next support lines and resistance levels are really quickly. And so this is the horizontal lines here. And so I always like to go with the high close, which is the top of the green candle, the highest green candle. And then I like to go across the low close, which is the bottom of the red candle in the channel. And so this gives us a playing field. So this is our playing field right here. And this is the top up here at 470, and this is the bottom down here at 303. Notice how it bounced right off the bottom. You know, this was the prior support level, huge support level. If you see Manero drop below 303, major red flag. You're talking about a drop down to 215. Remember what happened with Bitcoin. Trust me on this. When the 50-day simple moving average turns into resistance, I don't care what it is. It's headed for that 100-day simple moving average if it's below, and the downtrend continues. So, you know, I mean, these patterns repeat over and over and over again. The only thing that changes is the name of what we're charting, but the patterns are always the same and they stay constant, and that's why the analysis works. And so right now, it's dropping below the 50-day simple moving average. That's the green line, 322. It's at 313. If it closes below 322 and stays below that level, major red flag for Manero. It's signaling downside risk. You're likely to see 303 break and this downtrend start. Right now, it's just breaking the middle Bollinger Band. It was in an uptrend. So if it can hold on to 303 and get back above that 50-day simple moving average at 322, that would be very good. It could bounce, and then it has to get back above the middle Bollinger Band at 412. Or what is that middle Bollinger Band level? 392. What is that? No. God, sometimes it's hard to read this freaking chart. 371. 371 is the middle Bollinger Band level right here, and so if it can get back above that level, that's when it can get the uptrend going. It's never good when you start seeing it breaking down after a channel like this. Many times it'll break down further, so keep that in mind. Crucial level for Manero. Could be signaling big downside risk if it fails to get back above that 50-day simple moving average. Okay, let's look at some of the less familiar coins here. But these are huge market caps. This is one of the biggest market valuation tokens out there. ADA, these are big tokens that the average person hasn't heard of. And yeah, they're breaking down as well. They had stronger charts than some of the more well-known charts that we've looked at just now. But this had a very good uptrend. It's still trying to hold that middle Bollinger Band. That's the solid purple line. It's breaking below right now. Notice 4 days in a row. This is where it should have a technical bounce. Notice the lower wick on today's candle. People were loading. If it can get back above that middle Bollinger Band at right here at the 0.5585 level, then that could signal that this is where you'd want to take a reload for a technical bounce play. Now if that middle Bollinger Band at 55 or whatever it is level turns into resistance, that's going to signal downside risk, and you could see that pullback all the way down to that 50-day simple moving average. You have one line of defense here, and that's the support level right here at 5142. So fail to get above 55, and 51's on deck. If it drops below 51, watch out below. You could see this lower Bollinger Band tested, and you could see a drop all the way down to the 50 simple moving average at 3239. So this is a crucial level for ADA. It has to bounce here. If that middle Bollinger Band turns into resistance, I don't need to say another word. It's downside risk, right? We saw it happen to Bitcoin. Okay, so this is where it has to bounce, and they could. This could be that they're set up for it. I mean, you have multiple. Check out XLM. This is another one. Had a really nice uptrend. It pulled back. 4 red candles in a row, just like ADA, hitting the middle Bollinger Band, just like ADA. This is where it has to bounce. This is it right here. It's got to do it. This is the level. This is where you want to see a technical bounce off of 3.8. If it can hold 3.8 and stay above that level, then you should get a technical bounce. It could run back up here to this other close at 4.8. You have to get above 4.8 to break out higher for that ultimate high close here at 5.8. If that middle Bollinger Band once again at 3.8 turns into resistance, the downside risk is that a new downtrend begins. Currently, it's in an uptrend. The upper Bollinger Band is the top of the channel, and the middle Bollinger Band is the bottom of the channel, and the bullish upper Bollinger Band channel. Okay, and so when the share price or the cryptocurrency price hits the middle Bollinger Band, it's the bottom of the channel, and it's the load level if support holds, like right here, how it held, and that was a good load level. But if support breaks and it turns into resistance, it becomes the top of the bearish downtrending channel. And so the middle Bollinger Band's the top of the channel when stocks are heading lower, or cryptocurrencies are heading lower, and the lower Bollinger Band is the bottom. And so that's the risk with the middle Bollinger Band and loading at this level, is that it's what we call the 50-yard line. It's the middle of the playing field. It could go either way here. It could go bullish or it could go bearish. It's literally at the 50-yard line right now. It could go either way, depending on whether or not this little line, this purple line, holds. Everything's riding on the purple line. If it holds, that means bounce. If it breaks and turns into resistance, that means downside risk. It's really simple if you just follow the charts. Just keep following the patterns over and over, and it makes it easy. If you look here at the tight Bollinger Bands here for IOTA, just like Bitcoin Cash, we wanted to see that breakout to the upside, and we didn't get it. Sometimes that happens. Sometimes they do a shake before a bake, so keep that in mind. This might be the shake, and then they bake it afterwards, after people loaded down here at 210. So you can see the long lower wick off this gold line here. That's the 100-day simple moving average at 206. That level has to hold. Okay, now you've got the candle below the lower Bollinger Band. The candles could work back into the bands, and you have EMA4 at 320. Has to get above 320 to really get this bounce going. You could have a run from 250 to 320, which would be awesome percentage gains, and the downtrend could continue. So these are technical bounce plays, but technical bounce plays are different than taking new positions for long-term holds. If you're looking to re-enter for a longer-term position, you really want to see that the chart has turned bullish. Otherwise, or be ready to sell if it fails to break resistance. If you get the low entry point, that's great, but you don't want to end up holding and riding it lower if it fails to get reverse. Because bearish stocks ride EMA4 resistance lower, and it very well could start a downtrend here, and it possibly could work all the way down to the 200-day simple moving average at 130. You never know. It has to get above the middle Bollinger Band. It has to break out through that upper Bollinger Band to get a new uptrend going. It dropped below key support today. It closed yesterday below the green line, which is the 50-day simple moving average at 354, and that was a red flag, that breaking 355, and now there's more downside risk. And so, so this has got the technical bounce play going. If you look at the 15-minute chart, you can see that it's bouncing off of the low. Notice the big loading down here. So you had heavy loading at the bottom. Notice how the freaking big money, how they get that freaking, how they get the load at the very bottom every time. Just like on the 22nd of December, when they had that big shakeout and everybody loaded off the bottom, it was similar to that. You've got a similar move here today, where the big players are making money off this bounce, but the bounce is only going to continue if this purple line turns into support. Right now it's resistance. It has to get above 256. If it fails to get above 256, it'll signal downside risk. Once above 256, it has to break the 50 simple moving average at 279. Fail to get above the 50 and the 20, signals more consolidation. Once they both turn into support, then we look for a run up to the top moving average, which is usually the 300 simple moving average, currently up here at 346, and then it has to break that level to get a new uptrend going. So a lot of times you can get a run in between the 50 and the 300, but if the 300 fails to break, you have to lock in gains at that level. Keep that in mind. The 300 simple moving average on every time frame is the take profit zone if resistance fails to break. Okay, so let's look at TRX. We've been tracking this bounce play, and today might be the day. You just never know. What we do is we stalk our prey. We don't like to catch falling knives because that really hurts. But as you can see here, it's been dropping and dropping and dropping, and quietly every day we've just been checking it out, posting updates in the chat. We're looking for a bounce and a close above this pink line. Notice how ever since back here on the 8th, it's closed every single day below that level. Once we get a close above, that's going to be our signal, okay, it's finally ready to go, and we should get a nice bounce play going. Right now, the nice thing that's happening is notice there's a higher low. So you have a low, continually making a lower low, lower low, lower low, lower low, and now higher low. That could create swing point number 3. That's something that we look for in a downtrend, is a higher low. And so today's young. It could definitely still make a lower low. It came down and it hit our target. When we said that middle Bollinger Band broke, I mean, I'm not trying to I was just analyzing the charts, and this, because I've done this so many times, it just plays out like this. And so it's not like we're predicting the future here. We're just able to see what's the next move that's going to happen. Like chess, we can anticipate a few moves ahead on how the chart is developing. And on the 14th here, alerts were put out, that it was breaking that middle Bollinger Band, and that if it turned into resistance, it was going to head to that 50-day simple moving average, and that's exactly what happened. Yesterday there was a bounce right off of that zone. Notice that I had put in the green line there at 335 as the reload level, possibly, if it hit. And now it did bounce before that. It hit off of the key. Notice how this was the close and the open from these two candles, and so we always go by that high close, and so those become our support levels, and it bounced right off. So that was really cool. Now it has to get above EMA 4. If it can get above EMA 4, that's going to be your signal that it's finally ready to head higher. Okay, had to turn off Jim Cramer there for a second and just finish up. We've got SALT here, the last one. I'm going to throw in SALT, and yeah, because it is at the 50-day simple moving average. This was one that, it had that nice run. It came back. It hit the 50-day simple moving average zone right here on the 5th and the 6th and bounced. Got back above that purple line, the middle Bollinger Band. Dropped back below the middle Bollinger Band, and now it's worked back down to that 50-day simple moving average. Following this downtrend, this is where it has to bounce. 007, the 7 level. Basically, what is that at? 6 to be exact. It's at 68647. That is the huge level. It has to hold. If it drops below, that's going to signal downside risk. That 6 level was the 6-1. We had preached about that for like a month or two, saying it had to break that level to head higher, and that finally happened over here on the 21st. And so that is a huge support level. If it dropped below 6-1, it would be a major red flag. But this is where it should have a technical bounce. If SALT is going to be a bullish, as the company and everybody's been touting it as it's going to be in 2018, it's supposed to be its year. It's just getting going, just started. Then it's got to hold this 50-day simple moving average. So look for a technical bounce off of 6.8. All right, thank you very much for viewing this video. If you'd like to learn how to chart cryptocurrencies with using candlesticks and technical analysis, and how to like make money and keep yourself from losing money, and how to not be a victim of being a bag holder, or somebody that gets bad entry points, or somebody that just holds on too long, or somebody that wants to figure out, hey, this is how I can find out where to get good entry points. If you want to learn all that stuff, hit the link at the bottom of the YouTube video. I'll post a link to the chat, and we could teach you how. Okay, thank you very much for viewing this video. Have a great night.